pullback on the markets today after positive gains yesterday, but it really looks like the markets are a bit directionless at the moment.
I think we've had a very good run in the markets. We saw highs in the Dow Jones yesterday and S&P that we haven't seen since April. The markets have been moving up quite aggressively over the last few weeks. And I think profit taking coming in. I think people are worried about how the recovery is still panning out in America. And when we have these big spikes in the market over a few days, people do take profit, and we see some selling coming in today.
Of course, with the rally we have seen recently, we've also seen resources stocks joining in that rally. And of course, commodity prices have been looking pretty good as well. So those resources counters under pressure today, but they've also had quite a strong run, haven't they?
Yes, definitely. I think they lagged a little bit. We saw Anglos down in the below 300 Rand for a good few months, and lag in the industrials and especially the banking sector. We saw in the last few weeks that as that dollar weakened and commodity prices lift, people moved out and money back into those commodities. And we've had a very good run in Billiton and Anglos and the general miners. And you know the returns have been very good over the last few weeks. So a little bit of profit taking coming in, but it's not on very big volume.
Of course, we saw the dollar strengthening in late trade in the US yesterday after those housing numbers came out, and that was better than expected sales of existing homes. But earlier in the session, we did see that dollar under pressure, and that gave a nice boost to commodity prices, really coming out of that G20 meeting over the weekend. What did the market take out of that G20 meeting?
Well, they're looking for some direction on whether the countries are going to still fight their try to devalue their currencies, and there's a big fight going on to see who can get the weakest currencies that can get those exports going, and they wanted some clarification on how they're going to slow that down, and countries won't do that. However, nothing really clear came out of it. We saw that the dollars initially had a bit of strength, but then weakened again. So it's going to be difficult to get a concerted effort between all the different countries. Everybody's fighting for survival, and they need a weak currency. As we see in South Africa, our strong currency really hurts in our manufacturing and our exports. So we also need a weak currency, and I think it's going to continue for quite some time now, that devaluation of currencies.
And of course, we did have, as Eleni was saying, Minister in the Presidency, Collins Jabani, earlier saying that South Africa is going to be looking for a weaker currency and a more accommodative monetary policy going forward. We have that medium-term budget coming out tomorrow. Will the market be looking at that medium-term budget to see any direction on the rand?
I think I'm looking at it very closely. Maybe some exchange control adjustments that will come into the budget, maybe, and that will maybe let some money out of the country. That would be one of the ways they can start to weaken the rand, and maybe interest rate cuts going forward as well. So we'll be definitely looking at that budget, how they're going to spend on infrastructure, and can they get money flowing into the market, which will create jobs. We saw unemployment number came out still at 25.3%. It came out earlier today. So unemployment really problematic for South Africa, and we'll take a look at the budget there, how they're going to change that, and how they're going to weaken the currency.
How about the Federal Reserve's Open Market Committee meeting next week? And there, I presume the market is looking for more direction on this quantitative easing. Is that really going to dictate what equities do going forward from here?
Yes, I think so. If there's continued quantitative easing, it means that there's more liquidity in the market. People lending money at very low levels, and that liquidity will come back into the market, and there's nowhere really to put it but into stocks, and I think that will lead to stocks moving upwards even further than they are now.
So would you then say that the bull trend that we have seen in the market remains intact for now?
Yes, it's still intact. It started to lose a little bit of momentum, but the markets have to pull back by quite a bit still to break that bull trend. So currently now, if you're a trend follower, you would still be staying on the long side.
Results out from ArcelorMittal this morning. That's third quarter results, or results for the 3 months to September. And it's a nice improvement from a year ago, down a little bit from the second quarter, and this company is still facing some headwinds.
Yes, it is. I think that it was good that they swung into profit. I think up to 17 cents profit there. However, they said going forward, they looked at the steel prices under pressure, and they don't think that they'll be able to get the same type of revenue going forward. Their sales as well were down 21%, even though they did pull back into profit. So that's a little bit worrying. It's a big number, a difference in sales of 21%, and a decrease in steel price. So going forward, they've still got a lot of headwinds. Market not really liking the numbers that came out today, and Arcelor trading down again.
And of course, the company is saying it is still going ahead with its empowerment transaction, and that's despite meeting quite serious resistance from some minority shareholders.
Yes, I think initially it looked like the black empowerment deal there was going mainly to well-off individuals rather than to minority shareholders and people that are less advantaged. and people are complaining about it, and they'll see if they can get that through. But it looks quite dilutive to the Arsenal share price, and people are trying to stop that going through that PE transaction.
You saw Frankie also out with numbers, and they look pretty bleak. Headline earnings per share down 90%. Of course, this was pretty much expected because they did flag this in a trading update.
Yes, I think down 90%. It just shows you how difficult the construction sector is at the moment. If you don't have the very big contracts, it's difficult to keep your book running. You have one big contract and then you have nothing for a few months. They said that it's inclement weather that also hampered their earnings. Hasn't seemed to be too much bad weather in SA over the last few months. So it's difficult to see where their problems lie, but it just shows you really need some very big projects and projects that run over a few years to keep those construction companies coming. I see you said earlier in the report, Finch says that the construction sector will only recover in late 2011, so a lot of headwinds for the smaller construction firms.
Maybe moving into the retail space, we have shares in ShopRite slightly weaker today. Of course, this share did fall 1.6% yesterday. They had a trading update that didn't look too bad, but we also had Chairman Christo Visa saying ShopRite is not for sale, and I think maybe a bit of a takeout premium had been built into that ShopRite share price.
I think there was before Walmart came for Massmart. I think people did think that they might also be coming for ShopRite. Visa said that they didn't. However, he did say that one or two people had looked at them before, but they're not for sale. A very good set of numbers from ShopRite. I think that the share is fully priced, but going forward, they're in 16 countries in Africa, so they've expanded quite considerably in that area, and their growth in Africa in sales terms has been about 13%, which is very good. In rand terms, it only equates to 2.1%. And it just shows you what the strong rand is doing even there. But growing very good into Africa. The model's very good. They've got a very good, very big brand in ShopRite, and they're looking very positive going forward. But as I say, the share price is probably fully priced at current levels.